Okay, hello everyone. Today in this video, I'm going to explain a technique that we personally use, which we called How Can You Beat the Market Mathematically. So, first of all, yesterday was a wonderful day as those who watched my yesterday video of trend change in which the market was, if you look at gold, I think this was the area where the gold was trading, and I changed my trend from buying to selling, and from 13-14 area uh, I booked my profit once near the 1298 area, and then near 88-89 area, and currently still my trend is sell. And same was the case with euro. It was trading near this area, and then it started moving down, as the colors also indicated the same thing in daily, weekly time frames, healthy red candles. Still my trend is selling in euro, USD, gold, and GBP USD, and my current trend is buying in USD yen and USD CAD. So now I'll explain a little bit about this new technique, that how you can beat the market mathematically. Fellows, what I have learned in my 18 years, that Forex market is game of chances. No one is 100% sure, or no one can guarantee you that the market will move in this direction in the coming time. It is just your opinion, just you have to manage your investments, basically what I'll say. Because it people mostly focus on their analysis and their account size and their brokers and their spreads, but in my opinion these things are not that much important. Basically you have to manage your investments. We'll take an example. Let's say that a person has an account of just $1000. So what he should do is that he should only invest 20 or 25% of his account at a time, and he should keep the other 70-75% safe, because all those who have been trading, you all will agree this, that you have a losing day and you have a winning day, or you have a losing session and then a winning session starts. So try to uh, lose as much less as possible in the losing session, and try to earn as much as you can in a winning session. So what mostly people do is they just have just one account, and they invest all their investment in that account, and blowing of accounts in Forex is just an ordinary thing. You will face it again and again. You can manage it by managing your investments. So, if a person has a 1K account, if he invests only 20% at a time, and if he is right in the coming time or coming days, his account will grow. And if he is wrong, he will just lose 20%. As you all know, that most people use stop losses in an account. Like, many stop losses are required in one account. In the same way, you need more than one account to survive in Forex, first thing. Second thing is that when you lose, you cannot recover with a lower lot size. Mostly what people do, they start trading, and let's say they start placing orders of standard lots, and they lose 100, 200, $500. And when they lose $500, they lower their quantity. So it is really very difficult, that if you will lose with 1.0 lot size and you want to recover it with zero point 0.1 lot size, it will be difficult. So try to start slow with a lower quantity, as I normally do, that I scatter my quantity. I first select a range and then start placing my orders. Like, and I personally, we follow the main trend in the higher time frames. If you look at the color of candle, it is clearly indicating in this whole month that the color is red. It is trading below its opening price, so it is better to sell than to buy. Now, how you can beat the market mathematically, I'll quickly discuss that. If you take an example of this current chart of GBP USD in the coming in of yesterday movement, what you can see is that you all will agree that no one is 100% sure about the direction of the market. So, how you can beat the market mathematically? You can beat it like this. This technique works best in a trending phase. So, if you consider this area and you just do it, this that you start in a $1,000 account, you just start with 0.01. And what you have to do is you have to place an order the direction you want. First, let's say you place an order in buy from this area and you place a tight stop 10 to 20 pips. Now, what happens is that if this SL is hit, this 10-20 pips SL, you change your trend, you place your next trade as sell and with 0.02 lot size. You increase your quantity. Now either the market will move in your favor or it will reverse again. In this current scenario, or if in a trending market, most of the time the market will, after one, two, three, or four attempts, the market will start moving in your direction most of the time. In a sideways market, you have to place more orders. So if you look at this phase that the market was trading here, the prices was over here, and a person placed a buy order at round about 35.50 area, and he placed a stop loss 10 pips below. So when the price reached 40 area, stop loss was hit, he placed a sell order with 0.02 lot size. Now the market started moving in his favor. So you keep on repeating this. Let's take another example that the market was here. Let's see it from here. Yes, the market was trading here. A person placed a sell order, let's say, with 0.01 lot size. The market went up. His SL was hit. He placed a buy order with 0.02 lot size. The market went a little bit up and then started coming down. So again, the third time he placed a from here when the market started coming down again, just going 10-20 pips, 10-15 pips in his favor in his second trade, 0.02 lot size. So when the market came here again his SL was hit, so he placed a 0.03 sell order again. You place a buy order and you place a sell order. You place a buy order and you place a sell order. This is how you will have to do, and you keep on increasing your lot size. So a time comes, because you all will agree that market cannot stop at a specific point. It has to move somewhere. So in this current scenario, the market started moving up again. He had to do attempt for the fourth time with 0.04 lot size. Now he is losing, but first he lost with 0.01, then with 0.02, then with 0.03. Now currently his 0.04 or 0.05 started coming down, 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 and he recovered his loss because he lost with a lower lot size and he earned with a higher lot size. So this is how you take benefit from the market, by increasing and decreasing your lot size. You start with slow and you start on increasing as you lose, and then at a time comes when all your loss is recovered, you close the trade and start again with 0.01. These are the ideal phases. This is a trending market. In this, you hardly market needs one or two attempts. So this is a quick explanation. If you like it, I'll post another video. So